Okay, just as an experiment, I'm running a test here to see how many losses it takes to finally get a win here. So we've had on the 500 tick on the 3-bar reversal strategy. And then I'm going to go back over and say, how could I have filtered out some of these losses by other time charts and other confluences? But just simply on the 500 tick chart, we've had 1, 2, 3, 4, 5, 6. It looks like 7 losses altogether. And eventually, if we could have got a 1-to-1 on some of these, we could have broke even on some of them. I didn't really take that into account. Just did it eventually sweep the pivot low or not? And it did 7 times. Now we have the 8th one here, what we got long on a 3-bar reversal, and we're looking to try to make some money. And we were down 140, so this would have to go up, a good 6R return, and that's quite possible to see if we're going to make that back or not. It may just, hit our maximum stop loss, which is 250. If it does, that'll be the first time that's happened, and it's something we need to go through and experience because, you have to back test it in every environment and every circumstance and every ambience, and you have to understand what the limitations are to every strategy, because if you don't, you're not going to have the reality of it. So we want to know what the maximum drawdown can be on this kind of strategy. So I'm going to keep an eye on it, and we'll see what happens here. I think it's fair to point out right off the bat that all my time charts are pointing down in a bearish pattern. All the moving averages are in the proper spot on the 5-minute, 15-minute, and the 10,000 tick chart. So the moving average strategy would have been better. Any close on the 500 tick chart that continued down, and any of these would have been a much better strategy to use instead of trying to just use one time chart, the 500 tick, and try to see what a 3-bar reversal could bring me. No wonder there's that many losses when all the time charts are agreeing that it's time to go short. So number one, let's keep that in mind. You don't sacrifice a better strategy out of stubbornness, but I wanted to test it. So nonetheless, I'm running a test here to see how many losses will happen in a row in the most diabolical situation, which is going against the trend. And this is a good way to find out right now, what the drawdown would be if I ignore a better strategy and all the time charts and just stubbornly pursue one strategy, the 3-bar reversal, in this case, going against the downtrend, and see what the outcome would be. So it's a good learning experience nevertheless. Number one, to learn what the 3-bar reversal strategy's limitations are. Number two, understanding that I had a better strategy that I could have worked on and would have been a much more profitable situation. So let's observe. Let's see what happens here. In a real world with real money, I see the value in when I recognize that I'm going against the trend to go ahead and take, your 1, 2, 3R return and be happy. You're going against the trend. Be happy you got that. But in today's experiment, I have to hold it just to see how things are going to turn out. And as we can see, it's almost all the way back down to my entry point here. And if it hits my stop loss, we're going to look for the next 3-bar reversal to go long. I'm going to do it until the market closes today because I have to find out, what the drawdown will be if things go against me. I also want to point out that if I use the 2000 tick chart and look for 3-bar reversals, there would have only been 4, including the one that I'm in right now, which got a 4R return on it before coming down drastically. But those same areas over here would have avoided a whole bunch of these other little trades, like 1, 2, 3, 4, 5. 5 losses would have been avoided if I had just taken, well, let's see, 1, 2. Yeah, a bunch of these losses would have been avoided. Also, I could have waited for the low of the day to come down and be tested and enter in on those 2 right there. One of them was a loss because the other one got 4R return, and avoided all those little losses on the way down. It's very important, I think, especially when you're going against the trend, to have major confluences that agree with you taking the 3-bar reversal rather than just using one small little time chart, ignoring everything else. So this is very important to add to this video. And if I would have used the 5-minute chart to get a 3-bar reversal, I could have avoided all of this, had one winner. Let's take a look at that over here inside this box. Well, I might have not even got a 1-to-1 on it actually. I would have entered somewhere up here, stop loss down here, and it wouldn't have
Stop
got
filled.
okay. We got stopped out of that after having a 4-hour return on it. It came all the way down. So that was an amazing experience, but we're going to keep looking for a 3-bar reversal until the close of the day. Let's see what happens. More realistic note rather than just experimenting here. Once previous day's low is taken out right here, right by this red line, and all this red stuff right here, you're not trying to go long, okay? You're not trying to go long. Then you coordinate that with the 10,000 tick chart, which is all down completely, shorting opportunities going down, and the 15-minute chart all underneath moving averages, and the 5-minute chart all underneath moving averages. In confluence with the day chart, price has fallen below previous day's low, and it continues to push. All of these trades right here, all of these trades would have been avoided. The previous day's low is way up here. So none of these trades would have been taken. We would have been shorting in a realistic scenario outside of today's experimentation. So I just want to make that clear in the video too. This was just an experiment to see how many losses can happen back to back and what the outcome loss would be. And I'm still waiting for the market to close. Let's see what happened. Okay, the market closed and we're down $128, $130 and instead of 250 maximum loss. And we had a chance to get a 5-hour return on this one. We've had a chance to do a lot of stuff if I just didn't hold it and hold it. This one was a good move here. I think that was 4-hour return. If I would have taken the return here and got back in this one here, we would have definitely made money, at least broke even on that. So I think the big takeaway here is to understand the 3-bar reversal does have limitations. You can't just choose that strategy in all markets, especially when the time charts are all pointing down and I'm trying to go long. We had plenty of good opportunities on this 500 tick chart to short this thing. So many great entries that would have done so much better. So I need to realize in the future, and we're making some notes now, to avoid 3-bar reversals long during certain circumstances. One, when price falls below previous day's level, previous day's low, and also when all time charts are pointing in a bearish mood. Don't try to go long. All right, because if you remember on the other video, we were going along with the 3-bar reversals right in this area when moving averages were all pointing up. Those 3-bar reversals at the bottom were very, very nice because everything was in the direction of the bullish move. We were buying when the pullback came down. 3-bar reversals were good because we were going with the trend. And all the time charts agreed that it was a bullish trend. Doing that in reverse of the trend can, as you can see, can result in a lot of drawdown. All right, we'll see you on the next video. Peace.